So most of you might know me as just a small cap day trader. That's mainly what I've been doing on this channel for the past 5 years. But ever since the start of this year, with the massive market crash, I have been dabbling in option trading, primarily on stuff like SPY and other large caps. Now, I don't day trade them primarily. I more so just wait for these kind of multi-day reversal setups to form. So they don't show up every single day. But when they do show up, it can lead to massive multiple hundreds of percentage returns whenever the trade does work. So in this lesson, I'm going to be breaking down what I see on SPY currently and the trade I am planning to take in the next few days if it does reach those levels and actually hit my entry. So like I said, mainly options in this lesson. If you like option lessons, make sure to leave a like on this video. If you want to be notified of future videos like this, subscribe obviously, and let me know down below. Do you primarily trade small caps or trade options or trade something completely different? I would love to hear your thoughts. And with that being said, enjoy the lesson. All right, what's up everyone? Good afternoon. Welcome back to the Trade Buddy recap webinar. And today we are going to be primarily talking about options. I know the past couple weeks now has been mainly focused on small caps, but that's really just because I've been waiting for another time for SPY to, finally show some type of setup. And I think today is that first kind of sign that we're seeing a potential reversal form. So we're going to be talking about, just what I've been waiting for, what I've been, looking for on SPY and just those signs of a potential reversal forming. And also how I'm going to be planning to trade it over the next few days, depending on if it actually does, reach my entry criteria. As we know, SPY has been on a fairly decent bounce, like ever since, pretty much the 14th was like the last time I spoke about SPY realistically. And that was when it formed this kind of bottom reversal, right? So there was a few reasons why I believe that this could really lead to some sort of reversal from the downtrend. Now, this doesn't mean that SPY is gonna, no longer be in a bear market, but it did mean that, there was a very good chance that we could see some sort of bounce. So instead of trying to keep on buying puts to the downside, it might be smarter to more so look for calls if you did want to day trade it. And so that reversal, pretty much lied on a few different things. There was the technicals of the bounce and also like the psychological aspect of people getting trapped. Here on the 14th of October, the main thing that happened was the FOMC news, right? The news came out in the morning. It was awful news and the market gapped down heavily. It broke through all of its prior support levels from the past few days and it caused a massive panic. So what this basically did was it made a lot of traders get trapped because, just normal traders who watch like CNBC and just follow the news, they wake up, they see the bad news from that morning from the FOMC, and they say, okay, market's crashing, it's time to buy puts, it's time to short. And so a lot of people bought, tons of puts here, they sold down here, and then the market just rallied. And it got back over that key level of previous support that it made over the past few days. So this is what we call a failed breakdown. And a failed breakdown is important because the way that you look at it like psychologically is that anyone who sold down here is now trapped underwater, right? There's a lot of bag holders from short sellers here. And they're going to want to try to hold for as long as they can, holding and hoping that the market's going to come back down and they can get out for break even. So people got trapped. Also, from a larger technical standpoint, you look at the monthly chart, which basically just means that like each candle here is 1 month of price action. You can see back here, there was a previous resistance level right at 350. It's also a nice round number, right? That psychological round number. And that was the first time that we saw SPY actually test that level. And, as we know, previous resistance should hold as new support. So there was also a reason for it to bounce there as well. So not only was it a technical bounce, but there's also some psychology that you can kind of, just work into it. And as far as that bounce goes, once you see that very clear failed breakdown, the main setup that we were looking for was to buy that previous support as support again, because that failed breakdown happened. Now you should expect with that massive reclaim, it should hold support again. Now I didn't enter this on Friday because this day was Friday. I was hoping that we would see it just hold into the Monday morning, but you can see on Monday morning it bounced like crazy. So I missed out on that trade. But from that point, that was when the downtrend had reversed. So ever since that point, I've just been waiting for some clear sign of another reversal, because that's mainly what I trade on SPY. And there was really no clear reversal up until what's happening today. So once again, we want to bring in the larger technicals. You can see from this daily chart, there's not that many levels that you can really expect to hold as resistance. And if you look back here from September, there just happens to be a very big level of previous support that really was never tested as resistance during this downtrend. So for the past week or so now, it's like the main level that I've been saying, okay, I'm gonna just wait until SPY gets up to that area. Now, I also want to make sure that I'm watching the hourly chart for that reversal sign, meaning some sort of failed breakout. Because I don't just want to buy puts randomly into these levels, because if there's no weakness that's forming on the smaller time frames, they're just going to get blown through. So that's why I obviously don't want to short into this line, because there was no weakness there. I don't just want to buy randomly into puts, because for SPY especially, it's a very big instrument, right? It's like the entire market that it represents. So, whenever it does reverse, it doesn't just reverse right away. It takes time to actually, just wash out those buyers, show that resistance, and then actually go into a downtrend. And because options just very much rely on time, and you have to have your timing correct, it's okay to wait for that reversal to form and then jump in. It's not really the same thing for small caps, because they move just a lot faster and they have a lot smaller of a float, right? So with that in mind, you can see over the past 2 days now, we now see SPY is actually up in those 380s. And if you look at the hourly chart, we now finally see the first sign of weakness. Because if you look at this chart, we have this very clear level of previous resistance right at 385. And if the market was strong and it was still in an uptrend, then we should have been able to see this breakout happen and then hold that previous resistance as new support. But you can see it didn't. It sold off back below. So just like how we talked about down below 350, this to me is now a failed breakout. And basically anyone who bought here and above, like above 385, is now underwater. And they're going to want to try to hold and hope that the market's going to bounce back so they can sell for a small loss. So that's going to just induce more resistance when we get closer to their break even. So this is kind of like a head and shoulders that's forming here, right? That's usually what I look for, like here on the hourly chart. Now, like just one thing that's very important is you can't just look for this like wherever you want, because one of the main important things is that it does make sense to believe that we can see just resistance here, because on the bigger picture, we are seeing this big level of support that's now acting as resistance. And it's been a decent bounce so far, right? We've been running for like the past week and a half now. And it's reasonable to believe that, this is like as far as it's going to go. And we're seeing resistance form. So with that in mind, we can also look at some other things too. Also, if you look at the like the hourly chart, you can also see that kind of clear sign of backside forming too, right? Because normally, whenever a stock is in a strong uptrend, you should see the price overall hang and hold above VWAP. But whenever the trend does change, it typically happens in such a way where, number one, you see that previous resistance does not hold as support, but at the same time, you see the price dip underneath VWAP. And now we should expect that this VWAP is gonna act as resistance. So ideally, what I'm gonna be looking for as far as an entry is I want to see SPY bounce up, test this area, and then buy puts there into this zone between 384 and 385. That would be the best case scenario. And as far as managing the risk, we know that this should be bearish as long as it doesn't break out higher. So, as long as we hold below 386, we can stay in the position. And that's pretty much how I will be taking this trade. Now, as far as like the actual, like the timing and the strike and all that stuff, usually what I do is I like to take multiple different trades, one shorter term trade, one longer term trade. Now, overall, what I'll be doing is likely using this lower support just as my strike. So this support level is at 381.68. I'll be using a strike of 382, right? Because overall with options, I want to buy when they're out of the money and then sell when they're in the money. And that's how I make the largest returns possible. And yeah, so now we're finally seeing some setup form. It makes sense on the big picture for reversal here. It makes sense on the hourly chart. This is the first real sign of weakness. And I've just been saying, right, just every single day for the past week and a half, just to wait for it to show some weakness and don't step in front of the train. We'll see if tomorrow we can see a bounce into that 385 area. If so, then I will be taking puts at that level. Now, I did try getting into some puts today just for the first kind of breakdown. But unfortunately, I had my order out for puts at 33 cents. And right here in this bounce, the puts bottomed at 34 cents. So, classic Tony move, I guess. That happens to me all the time for some reason. So I didn't really profit on this first breakdown, but that's okay, because I know that we should still be able to see that last kind of relief bounce into that resistance and then go for the actual downside move. So on the 5-minute chart, probably something like this, where into tomorrow morning, we see maybe some morning spike, and that traps those last minute buyers who believe that this was just a day of weakness. So it pushes up higher, people buy calls, people go long, but then everyone who bought up here is going to be selling, and it's going to cause that resistance to hold, and then we should actually go for that real downtrend. So this is what I mean about just whenever you're playing reversals on stuff like SPY, you don't need to get in right away, right? Because the larger actual downtrend takes time to form. So with that in mind, I do also want to look at some other large caps just to see how they're doing and to see if it makes sense to see the market reverse, right? Because SPY overall just represents the biggest 500 companies. So if you look at something like Apple, for example, and look at this chart, you can kind of see a similar thing where, this one is really not doing too hot anymore. Like you could technically say there was an entry today where, if this was actually truly bullish, then we should have held this 151 level as support. But then it broke down, and it broke down in a big way. Now, when it comes to those breakdowns, it needs to be a very obvious break of that last support, really sell off, and then see that last bounce into it. So in this case, you can kind of look at it the same way, where this is the failed breakout right here. And then your plan would be to use this previous resistance as resistance again and buy puts into that level, right? So we already see a very large company like Apple is already, shown that reversal setup. Now, as far as going into tomorrow, what we should expect is that this next lower level right here near 149, that should hold its previous support as resistance, and then the downtrend will continue. So if you look at the bigger picture too, it makes sense to see a reversal here because we have lots of levels, right? All back here. Just if you look at this big downtrend, let me clear off the levels. You can see this level of support right near 150. That was a very big level before the big breakdown. And we never really retested it, right? Because here it didn't retest it. It didn't reach high enough. But now after this bounce, we have retested it and now it's failing it. So we're seeing that previous support act as resistance. And it makes sense that on the shorter time frame, we see that smaller time frame change, and it lines up with the fact that the larger time frame makes sense to reject here. So that looks valid. I think also something like Microsoft, I mean, they released earnings yesterday, so they got crushed. But even a few days ago, same kind of thing. There was big levels of previous support here near 253, and obviously it rejected terribly. And like I said, they released earnings yesterday and it was awful. But we're seeing not most, but we have two examples here. Like all of these large caps are showing us that they're just not that strong. So they will drag the SPY down. And something like Meta, right? Good old Facebook. I guess they dropped earnings just now and it's getting crushed. Down from 130 to 113. That's going to drag the market down as well. And I mean, just obviously this is a lot weaker of a company because of their terrible move into VR. But overall, same idea, right? You have this previous level of support acting as resistance. It made sense to see that reject. Even Google, right? Same exact thing. Big previous support acting as resistance. So I think that's just enough kind of data that you can look at to say, okay, yeah, it does make sense that we should see SPY also follow that same trend. If all these large companies that are just made up of SPY are rejecting, then it does make sense for SPY to reject too. That is what I'll be looking for on SPY. One last time, going to be waiting for it to bounce up into this area. SPY puts there and expect it to trend on downwards. Again, and as long as it holds below this previous high, then we should expect that trade is still intact and is still valid. Looking forward to seeing if it can actually reach up and test there. Hopefully it has the strength to tomorrow. But yeah, we'll see. Like I always say, this type of setup doesn't happen every single day. It's not like a day trading setup. You can't trade it every single day, but you can use it if you do day trade. Mainly because if you know that the current trend of SPY, then you know which buys to hold. Because ever since the 14th until now, your bias really should have been to buy calls, right? So if you do want to day trade like these morning flushes and stuff like that, your bias really should be calls. Now that we're seeing this massive kind of rejection happen, now your bias should be puts and use the larger time frame trend just to dictate what you do on the smaller time frames.